You made $65,000 as a freelancer this year. But how much of that actually goes to taxes? The answer might surprise you, and not in a good way. Today, I'm going to walk you through exactly what a freelancer earning $65,000 owes in 2026, dollar by dollar. We'll cover federal income tax, self-employment tax, and most importantly, how to legally reduce what you owe. Note: this breakdown applies to US-based freelancers filing as single with no dependents. Welcome to the Freelancer's Wealth Blueprint, where we turn complex financial concepts into clear action steps for freelancers and gig workers. If that sounds helpful, hit subscribe. Let's break down the numbers. First, let's talk about self-employment tax. This is the one that catches most freelancers off guard. As an employee, your employer pays half of your Social Security and Medicare taxes. As a freelancer, you pay both halves. That's 15.3% of your earnings, 12.4% for Social Security, and 2.9% for Medicare. But here's the twist. You don't pay self-employment tax on your full $65,000. The IRS lets you calculate it on 92.35% of your net income. So $65,000 times 0.9235 equals $60,028. Your self-employment tax is 15.3% of $60,128, which comes to $9,184. That's right. Before we even get to income tax, you owe over $9,000 in self-employment tax alone. Now here's a small piece of good news. You get to deduct half of that self-employment tax from your income. Half of $9,184 is $4,592. That reduces your taxable income. Let's move on to federal income tax. For 2026, the standard deduction for single filers is $16,100. So we start with your $65,000, subtract the $40,192 self-employment tax deduction, and subtract the $16,100 standard deduction. $65,000 minus $4,592 minus $16,100 equals $44,308 in taxable income. Now we apply the 2026 tax brackets. Here's how they work for single filers. The first $12,400 is taxed at 10%. That's $1,000. Income from $12,400 to $44,308 is taxed at 12%. That's $31,908 times 12%, which equals $3,020. Your total federal income tax is $1,240 plus $3,829, which equals $5,069. Let's add it all up. Self-employment tax, $9,184. Federal income tax, $5,069. Total tax bill, $14,253. On $65,000 in income, you're paying $14,253 in federal taxes. That's an effective tax rate of 21.9%. But wait, we haven't talked about state taxes yet. If you live in a state with income tax, add another 3 to 10% depending on your state. In California, you'd owe roughly another $2,500. In Texas or Florida, $0. So the full picture for many freelancers earning $65,000 is a tax bill between $14,000 and $17,000. That's a lot of money. But here's where it gets interesting. Most freelancers overpay because they don't use the strategies available to them. Let me show you how to legally reduce this tax bill. Strategy 1. Contribute to a solo 401k or SEP IRA. Every dollar you contribute to a retirement account reduces your taxable income. On $65,000, you could contribute up to $15,250 to a SEP IRA. That's 25% of your net self-employment earnings. If you contribute that $15,250, your taxable income drops from $44,308 to $29,058. That keeps you entirely in the 10 and 12% brackets and saves you roughly $3,355 in federal income tax. Plus, you're building retirement wealth. It's a double win. Strategy 2. Track every business deduction. Many freelancers leave money on the table by not tracking legitimate business expenses. Your home office, internet, phone, software subscriptions, professional development, equipment, these all reduce your taxable income. Let's say you have $5,000 in legitimate business deductions you weren't tracking. That's another $100 in tax savings at the 22% bracket. Strategy 3. Claim the QBI deduction. The Qualified Business Income deduction lets you deduct 20% of your qualified business income. On $65,000, that could be up to $13,000 in deductions. This deduction alone could save you over $2,500 in taxes. And thanks to the One Big Beautiful Bill Act, this deduction is now permanent. Strategy 4. Pay quarterly estimated taxes. This doesn't reduce what you owe, but it prevents penalties. The IRS expects you to pay taxes throughout the year, not just at filing time. If you owe more than $1,000 at tax time, you'll face underpayment penalties. Divide your estimated annual tax by 4 and pay quarterly: April 15th, June 15th, September 15th, and January 15th. Let me show you what your tax bill looks like with these strategies. Starting income, $65,000. Subtract $5,000 in business deductions, $60,000. Subtract $15,250 SEP IRA contribution, $44,950. Subtract $4,058 self-employment tax deduction, recalculated on the lower income, $4,292. Subtract $16,100 standard deduction, $2,492. Subtract QBI deduction of $8,950, 20% of qualified income, $15,240. Your new taxable income is $1,542. The first $12,400 is taxed at 10%, $1,140. The remaining $2,042 is taxed at 12%, $341. Your new federal income tax is $1,581. Your self-employment tax on reduced income is approximately $8,549. Your new total tax bill is roughly $9,990. That's a savings of over $4,200 compared to paying without any optimization. And you've put $15,250 into retirement savings that will grow tax-deferred for decades. Here's your action plan. First, open a solo 401k or SEP IRA if you haven't already. Fidelity, Schwab, and Vanguard all offer free options. Second, track every business expense. Use software like Wave or QuickBooks Self-Employed. Third, make sure you're claiming the QBI deduction. Most tax software handles this automatically, but verify it. Fourth, set up quarterly estimated tax payments. Calculate your expected tax and divide by 4. Fifth, consider working with a tax professional. On $65,000 in freelance income, a good CPA can easily save you more than they cost. The bottom line is this: a freelancer earning $65,000 with no tax planning pays over $14,000 in federal taxes. A freelancer with smart tax strategies pays closer to $10,000 and builds retirement wealth at the same time. The tax code rewards people who understand it. Now you have the knowledge. It's up to you to use it. That's your tax breakdown for $65,000 in freelance income. If you found this helpful, subscribe for more freelance finance content. As always, this is educational content, not tax advice. Your situation is unique, so consult a qualified tax professional for personalized guidance. See you in the next one.